This is Tom Cloud with an update on gold and silver for SRS Rocco Report. First of all, it's been a few weeks since we talked and many things have happened, but I want to bring to your attention some of the most occurring events. We'll start with gold. Certainly the world central banks have got it. They figured it out. We know that anything to do with a financial reset in the future is going to come through gold. Gold is the only investment that's accepted by all 28 world markets. Everybody in the world knows the value of gold instead of fiat currencies, money by decree, paper investments, anything you want to call them. Now, certainly that's in your portfolio, but what we're talking about is the safety part, the core part, what should be the foundation is gold because of all the attributes that it has, and it cannot be created out of thin air. A few weeks ago, I reported from a meeting that I was in that do not be surprised to see China and Japan together starting to liquidate U.S. treasuries that would send the dollar into a tailspin. And the ones that have been in this a long time realize that every time the dollar goes down 1%, gold goes up 5 to 6%. As you can see from 2000 to 2012, when the dollar went from 126 down to 72 on the world index. Then we had the big financial crisis in 2008. The dollar went back to over 100. Now it has started its drop and is down to 96. And we expect that it will go back to 72 sometime in not the too distant future. Maybe 18 months to 3 years. Hard to say, but certainly what we're watching is that China and Japan could take $2.5 trillion of U.S. paper debt and fix it where the liquidity would not be there, and we would have to print more money, the Fed would, to buy the debt that's being rolled over. Certainly China and Japan are not in an all-out hurry. They don't want to destroy their treasuries, but they do want to have steady getting rid of them and getting out of them and moving more, as we see, to gold. The central banks in China, Russia, India, Brazil, and other small countries are buying gold every month. And last year we saw a record year where over 630 tons of gold was purchased by central banks. This year we haven't seen the figures for March yet, but for the first 2 months they were on a rate to go over 800 tons of gold into central banks. What do central banks know that you don't know? Why would a central bank be buying gold this fast if they didn't know it was going to be part of the settlement or part of a reset of some kind or part of a new currency backed by gold? Remember, we've talked about this show before, the United States dollar right now is the only currency that went off a gold-backed standard that is still in existence since 1971. So how long will that last? I don't know, but I will tell you it will not make it. The U.S. dollar in the long run will be reset with a new name or a new ratio to what you're in now. And those of you that are not holding tangible assets, in particular gold, you could take a major haircut on your equity, 20, 30, 40%. Some people think as much as 60% it would be written down just from the paper to keep the economy afloat. And remember, next time there's a banking crisis, there is no bailout by your government. It's a bail-in. Legally, the money you have in the bank is not yours. The bank can keep it or give you part of it. You have no legal recourse against them. So hopefully you're looking at the demand in the East. I was at a meeting 4 or 5 weeks ago where there were people there from out of the country, particularly Singapore, Hong Kong, and Indonesia. And what they're talking about is the demand there is so much heavier it is in the U.S., they've got it. They've got it figured out. They realize they've got to have some hard assets in their portfolio to keep up with the potential crisis that we see. So we'll look at that. Now, the other interesting thing is silver. that's currently about 88 to 1 on a gold ratio, they think could even go to 100 to 110 because of this big demand that's going on with gold, with the central banks and especially money managers now realizing they're putting a percentage into gold. And as I've told you before, do not buy an ETF that are paying 50 basis points for storage when we can set you up on your own ETF at far below, way below 50 basis points, because I do not charge any markup on storage. We have the lowest storage in the world. This little company has the lowest storage in the world. And if you've got metal stored somewhere else and you're paying 50 basis points or more per year, give us a call. We can tell you how you can move those metals to one of our storage contracts, cut your storage dramatically for only a small investment with us. But if you'll give us a call at 800-247-2812, we can discuss that in detail. But going back to the silver, silver could go to 100 to 110 ratio, but at some point, the fundamentals for silver are unbelievable. I sat and listened for an hour about the demand for electric cars in China for the next 6 years, the amount of silver that would have to go into each electric car. Then you've got the solar panels. We saw it now in California, where you're building new houses, you have to have solar panels. We saw it last year in China. We continue to see it. And the demand for those two areas alone, not counting cell phones, digital televisions, high definition televisions, all the other uses for silver, that it'll overwhelm the silver market. But on the short term, you may not see it do much. You really may not see it do much at all. It could stay in a flat, but when it does go, you're going to wish you'll be glad you were a few months early rather than a week late, because when silver moves and JP Morgan and others go along, and our sources tell us it will definitely happen while Trump's in office, but it could be this year, it could be this fall is the most likely time I hear. But when they go long, you're going to see silver move like it did from 2000 to 2012, when you saw it go from $3 to $48. You saw it go back in 2008 and then back up again to $48. So this time I think it'll be higher than $48. So just keep cost averaging your silver. Keep buying bars and coins as you can. But it is the lowest downside risk of any market out there. Stocks, bonds, gold. It is the lowest potential downside market, as it's currently selling right at average mining cost worldwide. So keep an eye on the commitment of traders, the cotton numbers, but you need to be looking at silver. And I want to finish by the buy signal I gave in platinum back about 2 or 3 months ago at 756. We've seen it move steadily up to the 870s, and we think it's getting ready to take another jump. We're seeing what's going on with the futures contracts, and do not be surprised to see platinum at over 1,000 this year. And we all know that we gave a sell signal on palladium. It did continue to go up for a little while, but it has pulled back about $300, and there may be another surge up, but long term, you're better and safer in platinum if you're looking to make an investment between platinum and palladium. And we're happy to tell you why. We don't have time to go into detail on this show, except to say give us a call at 800-247-2812. And the many of you that are already clients know shipping is free. We have no shipping cost to you whatsoever. We pay all that. We're making 1 to 3% up front. We're charging nothing on the back end to sell. We've lined up the lowest storage in the world for you. So certainly if you're a client of anybody else and have anything on storage and you're paying more than 50 basis points, you need to give us a call. Lastly, we're starting to see, I saw an article recently where the next big amount of money are baby boomers born between 1946 and 1955, beginning to retire and accelerating retirement. Their 401ks are coming out as they roll them out in self-directed IRAs and self-directed precious metals IRAs. We're doing more in IRAs right now than we've ever done because more people want to take part of those 401ks that did not allow gold investments or silver investments or platinum investments. So we are happy to talk to you. We can be your broker. We can be your representative. We cannot be your custodian, but we can put you in touch with top custodians that can do that. So once again, if you've got money in 401k, you're retiring soon, or you already can roll out part of it, I would get in a self-directed thing. And then lastly, you need to decide for asset allocation to divide your wealth into different areas: stocks, bonds, real estate, gold, silver, foreign currencies. There's different ways to do that. And certainly I'm here from doing this for 43 years. I'm happy to give you old geezer's opinion as I've watched these markets rotate many, many times. Have done quite well as an investor from being aware of these items. So as it says in Ecclesiastes 11:2, divide your wealth 7 or 8 ways, because no man knows what disaster will come upon the land. With this special report for SRS Rocco, this is Tom Cloud signing out.